morning. Good morning. Good morning. I'm David McGar. This is Property Value, where I talk about commercial real estate focused on South Florida. Today is April 28th, and we're going to talk about mortgage rates because it's everywhere in the headlines. So it goes a little something like this by CoStar Economy. Higher mortgage rates begin to cool the pricey housing market. And I still need a loan. So this is by Christine Cooper and Raphael Deonda, CoStar Analytics. With the 30-year fixed mortgage rates dropping 5% recently, home buyers appear to be reevaluating their budgets and pulling back on offers. The reservations come as home prices continue to climb to new record levels. The median price of existing single-family home, for example, grew to $382,000 in March, up 15.2% over the year, according to National Association of Realtors. Meanwhile, the U.S. Census Bureau reported that the median price of new single-family home reached $436,700 in March. That was up 21% year over year, according to the S&P Case-Shiller Home Price Index, which accounts for the same property transactions that closed from December 2021 to February 2022. It grew by 19.8% over the year. While a shortage of supply has propelled home prices, inventory ticked up last month. At the end of March, roughly 830,000 single-family housing units were on the market, according to the National Association of Realtors, up from 740,000 the prior month. That marked a series low going back to 1982. For sale inventory rises in March, meaning less buyers. Rising inventories at a time of declining sales. Counts suggest that more prospective home buyers are losing interest. NAR reported that existing single-family home sales fell by 2.7% in March, while the Census Bureau reported that the new single-family home sales unexpected tumbled by 8.6%. The lack of home affordability is the primary deterrent for many households. Nominal incomes have been rising at their fastest pace in decades, but inflation is cutting into the gains by making many goods and services more expensive. The NAR's Housing Affordability Index, which measures the ability for a typical family to qualify for a mortgage of a typical home, fell in February, the latest available reading, to its lowest level since August of 2008. The index uses the average mortgage rate paid for sales that month, which NAR reported at was 3.83 in February. Rising mortgage rates are eroding affordability. However, many of those mortgage rates were locked in late January. Prospective home buyers now seeing mortgage rates that are significantly higher. The Mortgage Bankers Association reported that the average mortgage rate reached 5.2% during the week ending April 15th, compared to 4.06% during the same week in February and 3.64% during the same week in January. 5.2% in March, in April, 4.6% in February, 3.64% in January. Jesus, someone put on the brakes. It comes as no surprise, then, to see a pullback in home buying activity. Mortgage applications for purchase during the week ending April 15th. The latest reading fell by 3% from the previous week and were 14% lower than the same week 2021, according to the Mortgage Bankers Association. More supply is on the way for now. A robust construction pipeline should provide a boost to inventories, but builders continue to face challenges in completing construction. The Census Bureau reports that single-family housing starts during the first quarter of 2022 grew by 3.9% over the same period in 2021. As housing starts tend to lead completions by about 6 months in the single-family sector, completions could presumably grow to a pace that's about 200,000 units higher by the third quarter of the year. It seems just a couple months ago we had no supply, and now we are going to have more supply. Multifamily housing starts are on an even faster trajectory relative to their recent completions. In the first quarter of 2022, starts in developments with 5 or more units grew by 26% over the same period in 2021. These buildings take longer to complete, so the lead time in multifamily housing starts to completions is about 11 months, meaning completions in this sector are on track to grow by a pace that will add 125,000 units to the market by early next year. However, the pace of construction could waver as the year progresses. Some home builders have expressed concern that rising material costs will be more difficult to pass on to home buyers now that the mortgage rates are spiking higher. The Home Builder Confidence Index, measured by the National Association of Home Builders, fell to 77 in April, a 7-year low from 79 in March and 83 in April 2021. Most notably, traffic of potential buyers dropped sharply over the past month as mortgage rates spiked. Index is still higher than 50, which signals continued home builder optimism. But builders might be wary of cooling demand in the environment of a higher home prices, deteriorating affordability, push off the plans for new developments until the market stabilizes. What we're watching. On Thursday, the Commerce Department plans to release its advanced estimate of economic growth in the first quarter. Expectations for this number to be significant drop off from the fourth quarter final reading of 6.9, which had been boosted by strong inventory growth. The first quarter of 2022 will likely come in far slower as the economy faces continued supply chain issues, inventory drawdowns, and the impact of Russia's invasion of Ukraine. An undated inflation reading is set to arrive on Friday with the Personal Consumption Expenditure Price Index for March, which is expected to tick higher. Again, that was by CoStar Economy, produced bi-weekly by Christine Cooper, Managing Director and Chief U.S. Economist, and Rafael de Anda, Associate Director of CoStar Market Analytics in Los Angeles. Oh my, I got to get my townhouse. Got to get my mortgage on my townhouse before these rates go up to 15%. Well, I don't know if they're going to go up that high, but they're definitely on the increase, and they're increasing fast. Wanted to really jump over here again. We've been watching the 10-year Treasury note. This is by Wall Street Journal Markets at back to 2.874. Yesterday it was at the 2.7, so it did slightly increase. And the mortgage rates for today, Thursday, April 28, 2022, the average rate for the 30-year fixed is 5.42, up 15 basis points from a week ago. If you're looking to refinance your current loan, the average 30-year fixed refinance rate is 5.42, an increase of 17 basis points over the last week. Meanwhile, the average 15 refinance rate is 4.65, an increase of 21 basis points over the last 7 days. And that's it, guys. Thanks for listening. I'm David McGarr, Property Value. See you next week. Have a great weekend. Bye.